All right, good morning, everybody. TG here. So, thank you to everybody out there on Facebook, YouTube, and we have X. So, good to see you guys there, and then everybody else in the Moxie room back with you this morning. So, the market continues to just chop around and go sideways. It's kind of what was expected and what we discussed earlier when I was on the mic with you all. That basically it's FOMC day. The market did its move yesterday, and today is pretty much just going to hang out until FOMC. So we've just been almost exactly sideways. And so that's what we're looking at is just a back and forth situation. So uh, don't expect too much until the news event comes out. Jerome Powell's comments that'll come out at basically 1 Central, 11 o'clock my time. And then the market will go kind of crazy. So the algos will try to figure out, is this bullish, bearish, what to do? And they'll gyrate it around for a little bit. And then the next thing to be looking for is when Jerome Powell does his Q&A and see if the rest of the market can kind of figure out what he's saying and which way they want to go. Also remember that a lot of times the real move or the big move happens the day after the FOMC. So there could always be some sort of trick where, on the release of interest rates being cut, whether it's quarter point, half point, or 3/4 of a point, which is what I guess there was some letter that the Congress people sent to Jerome Powell urging for a bigger cut. Of course, that seems like politically important to them. Um, and so we'll see which one happens and how the market reacts. And as I said, on initial news of the interest rate cuts, we have no idea what's going to happen. I'm just saying that if we get a move to the upside, because interest rate cut, bullish, it could come into a double top and maybe the next day we come down. Who knows? We could also it could be a buy the rumor, sell the news, and we got what we wanted, and now the market comes down like this. Anything can happen. We're going to have to just wait and see how the market reacts. Today is not a day to, heck, try a day trade right now, or even try to put on some big positions going into this because there's a lot of unknown, and it's basically a news event. All right, so hopefully that kind of puts you in the right frame of mind for today. And if this is all new to you and you're like, why is the market not moving today? Well, now you know. Hopefully that doesn't surprise you later in the day when the market has been quiet all day and then suddenly starts to go crazy at exactly 11 o'clock Pacific. All right, so looking in here, some of the bigger things we can talk about is that I have this diagonal trend line, and we've been looking at this for a few days at this point, and you can see that we are pretty much right back at it. Yesterday was maybe a little bit of an anomaly. We can see we came up and pushed just past it, and then we came back down. So as I said, it kind of looked like an anomaly, but if you look here horizontally, you can see that, and I think we actually, by just a dollar or something, a few pennies, we actually made new all-time highs yesterday, and that was kind of one of those things where it was when it, like, basically go up there, ring the bell, and then that's when they sold it off. So somehow, some way, it was both a magnet and also a brick wall to where the market came up there, made new highs, so technically, officially, all that kind of stuff, and then they sold it off, and so we're back down here. Yesterday was, I think, an opportunity. We saw that. We took a 0 DTE trade. We kind of fumbled the second entry. The first one was spot on, but then it rolled over a little bit, and then we got a second entry, and it turned out there were two spikes when the market dropped. So we were trading those 0 DTE puts. The first spike was about 200%, and then the other spike was 450%. And all of this happened within 40 minutes. And the second entry was about an 8-minute window. So, this stuff can be pretty quick, pretty fast paced. If that is something that floats your boat, that is the thing that I've been working on most recently in the Moxie room, is all this 0 DT stuff. But you can even see here that opportunity was, hey, price is overbought, we're too extended, likely to come down. And that's the direction that we traded yesterday. And we got that move. And really, it was just back to neutrality. So if we look at this, the other thing we can kind of look around, let's talk about the VIX. I believe today is VIX expiry. Not sure how that's going to really affect the market or anything, but I think that the bigger deal is that the FOMC is speaking today, Jerome Powell and all that kind of stuff, rate decisions, and so we'll have to see. This has generally been kind of working its way up in anticipation of that news event. So, VIX is a little bit up because of that. And so are the options. We were looking around at those zero DT options. So yeah, Vijay, we had to go 100 points, 100 SPX points in order to even get into the price range that we normally look at for calls or puts. And so that is definitely a thing. The other thing that we noticed, yeah, Vijay, I guess you weren't around this morning when we were talking about that, huh? The other thing that we noticed, and Thomas was mentioning this, he said the puts were twice as expensive for the same strike versus the calls. And there might be some information there to where the market makers are also leaning one side versus the other, and so they are, uh, dialing in more profit, more money, more whatever, more volatility into the puts as opposed to the calls in this case, because maybe they think that's the direction that the market's going to go. So I just kind of wonder if that's something we'll be watching for and seeing if it's going to be a thing. So we come in through here. And as far as the last couple days, we have been watching the UVIX and the VIX start to hold its 15-minute time frame. So that is something really key and important. We can also see that there was a bit of an elf shoe on the hourly chart, and we're now up here over the hourly 50. So as that anything kind of goes, the VIX and the UVX could certainly continue to move up for a while. And then we'll see if, I don't know, if we find some support and if this comes back down. It would be nice to see all of this come down, all the volatility come back down a bit. But another view that I have been looking at and discussing recently, I've always known about the SPIX, never really looked at it too much. I still don't see too much that I want to talk about right now. But for those of you who are not familiar with this is the inverse ETF of the UVIX, which basically it moves in the direction of the SPX. I know there's a lot of numbers, a lot of letters that just got thrown around, so take a look at it. But basically, if you want the market to go up, you're going to want the SVIX to go up too. They move with each other, whereas the VIX and the SPX move inversely to each other. And the one thing I'm kind of noting in through here, and this is still too early to definitively say anything, but it's something that I want to be watching for, is we have this overall double bottom, which is also what I chalk up as an elf shoe. And for those of you who understand the elf shoe pattern, we might possibly be seeing a pattern within a pattern, and there's an elf shoe pattern here also. And then again, for those of you in the Moxie room who get my patterns, we have a potential 5250. In fact, for those of you who are with me this morning in the Moxie room, and we were talking about Google and NVIDIA and gosh, even SoundHound, and we were talking about that 5250 maneuver. Look at this showing up even on the SVIX. These patterns and things are all over the place, and this is why I teach these things and also show that they're fractal. And so, yeah, look at that perfect 50, 250 maneuver. Now it's up to the market to show us if this is going to go up or if it's going to continue to go down. We don't have any real answers at this point because it's actually just very neutral. And so the next step is going to be kind of the critical step. Um, as I said, I'm generally leaning for the market to pull back. I would prefer to see that because I think the market pulling back to say the hourly 50 or even to the daily 8, something like that, I think would help build a better base if the market really wanted to go up into the future. I think it's a little bit pushed and a little bit stretched right now. And so if the market did pull back, that would mean this SVIX would hold this area and actually pop up a little bit like that. So we'll just have to, or sorry, no, the other way. It actually continue to fall down like that. Because remember, the SVIX goes in the direction of the market, and that's very possible. So for those of you who understand the 5250, remember, we're just looking for price to come back to the 50, and then we continue to see what happens. So there's a possibility, and again, I'm just kind of watching this stuff. If this comes down, I'm wondering if perhaps we can come down, retest the low area. Notice that the Moxie indicator is above 0. That would put us into a potential trampoline move on the hourly time frame. And that could end up being a bullish thing. So these are just, out there patterns and formations that it's kind of a if this then that kind of thing. I'm looking for stuff and I want to see what kind of develops over the course of time. And it's some of these things to kind of put into your mind a little bit ahead of time and to see how they unfold and to be prepared for this. That being said, let's look at Google. We kind of talked about this morning. I thought this was a great example of where Looking at other stocks and other names can help give you a little bit of an idea of what the market might do. And this is part of the reason as to why I think that the market could use a little bit more of a pullback, as you know, since we ran up the last few days, is because if we look at Google, we are up here at resistance. We have not tested support, and we're also up here at resistance on the daily chart. So I don't see this as something that I would want to enter swing long up here. Sure, it can move a little bit further, but this is not a swing long area. What I want to see is a pullback, and if that holds support or not. So yeah, one of those things. And another one that a lot of people have been talking about, even over in the simpler trading room, a lot of people keep talking about Apple. So goes Apple, so goes the market, and all that kind of stuff. And you can see here we're still just kind of just trending down. We have a nice day today, great. But if you notice, we're still kind of in this downward channel. We haven't turned around yet. We still have the Moxie indicator below zero. We have not engaged with the 15-minute 50. Even though we're up over it, we haven't demonstrated that it is support yet. And we haven't demonstrated anything on the hourly chart yet either. For all the times that we keep getting over the hourly 50, it's still not holding it. And so I think we need some more time to get this thing figured out, which tells me that maybe the market needs a little bit more time too. I think Nvidia was doing the same thing, but let's take a look at Meta, because this is another one. Looks like it's just itching to break out. But again, I'd be cautious of wanting to initiate a long swing trade right up here. I mean, look at this right here. It's kind of a game of whack-a-mole. Who wants to be up there and buying this? I don't think right away. I think what we're going to be looking for is if we can get one more little pullback in through here, test the hourly 50, and if it holds, then we can get our little breakout to the upside. Okay, it's obviously been a bit tricky. This 535 level is a really, really big area and is clearly resistance. So the question is, when is this thing going to break out? I imagine it will at some point, but who's going to be the first one to run across that and actually get going? So we got Meta, and then we can look at Amazon. This kind of goes into another thing that I talk about, where I look for price to engage with moving averages. And right now we have a bit of a conflict. We have price trying to move up across a downtrending daily 50. That great. It can go for a while, but eventually I want to see price in the daily 50 meet, which just means that as far as the longer term swing trade setup, I think we also still have some time until that finally happens. I am encouraged by what we're seeing here as a potential flag. It can still move down. We'll have to see what it does with that hourly 50, but I'm encouraged to see that maybe this can kind of hold some sort of flag, and if the market wants to keep going up, it can. But I think, again, not from right here, not from right now. One of the other things, if I'm looking at the IWM, we have actually been seeing some pretty good strength in the IWM, the small caps. I do think that we are in an interest rate cutting cycle. I don't necessarily. I'm not going to be saying that the first rate cut is going to be bullish and all that kind of stuff. It could be kind of a trick, buy the rumor, sell the news, and to the rest of the population out there, like, oh, interest rates are getting cut. Great, that should be bullish for the market. I'm going to go buy the market, and then they get spanked because that doesn't happen. The market actually ends up pulling back. That's a possibility. But I do think that once the dust settles, and possibly even after the election, once we get that kind of figured out, that the market, I think, still wants to continue to be bullish. I do think that generally an interest rate cutting cycle is bullish for the market. And, for as much as we are seeing bad job numbers and we are seeing things slow down and contraction, all that stuff. People keep talking about recession and inverted yield curve, all that kind of stuff. I still think that there's probably going to be this honeymoon phase while we have interest rates coming down, market can be bullish. The recession hasn't shown up yet. Things aren't totally falling apart yet, but sometime down the road, sure, that'll all catch up, and then maybe the economy will catch up to the market, kind of thing. But for right here, right now, I'm still thinking we're leaning to the long side. It's just a matter of when. And if we look at the IWM, I mean, this looks good. This looks like a really nice, healthy flag. It's a pretty wide flag, but this doesn't look too bad. Until we probably break something like this to where we really fail to the downside, this is still looking pretty good. I just want to see kind of, over the next couple days, let's get this figured out. Over the next couple days, a little bit of a pullback. I don't really want to be buying this up here at its previous highs where, game of whack-a-mole. Who wants to be the first one? No thanks. I rather join everybody else when this thing maybe pulls back and then everyone builds it here and then they push it up like that, if that's going to happen. I'm looking for it. We'll have to see if it happens, but I also don't really want to go buy it when it's gapping off of the daily 8 EMA the way it is. On a bigger picture, let me zoom out. For those of you, again, who understand the Moxie indicator and what I show you, check this out. Have you guys noticed that even though price dipped below the daily 50 twice, notice how the Moxie indicator is still above 0? Again, I think that's bullish. That is what I call a trampoline move. Price below the 50, but the Moxie indicator above 0. It's kind of like trying to push a beach ball underneath water, because the Moxie indicator is saying, hey, I'm buoyant. I want to be up. I'm over 0. I am above the water. And you're trying to push that beach ball below the 50 SMA, which is like, the water. You're trying to push below it. And it's like, nope, I don't want to do that. And so every time it comes down here, you can see it pops up. It comes down here, pops up. It's bullish. It's buoyant. We should continue to see this go that direction. Heck, even on the hourly chart, you can see here we had a double bottom. Check out this divergence that we had. Made a higher low on the Moxie indicator. So for those of you who are out there and YouTube, Facebook, X, if this is the first time, or if you've kind of been looking around for a while and you've watched me for weeks and months and you've seen this stuff, this is kind of my point. This is how the Moxie indicator works. This is how this stuff pans out. And this is why I'm saying that I think generally speaking, we should be bullish on the market, because if we also look at the higher time frames, this doesn't look too bad. It really just looks like it is in a gradual move to the upside. It's not going to be 2020 again. That was kind of a maybe a once in a lifetime situation. But this generally looks good. And even if you look at the monthly chart, there we had a very, very long base. Then we had kind of this next Darvas box, and I think we are in a new Darvas box. And for however long we're going to be there until we keep moving up, I think we are. One other way to look at that, we could look at MDY. This is the mid caps. Doesn't look too bad, does it? Kind of choppy, but generally speaking, flagging to up. So again, I think that this market is looking up. And even if we look here, you can see, look at what it's doing. It's sitting right on its previous all-time high. It is now support right there, right there. Yeah. And then if we look at the RSP, which is the equal weight of the SPY, check that out. It doesn't look bad, does it? So, for the near term little type stuff, maybe today, tomorrow, this week, whatever, the cutting of the interest rates might be a buy the rumor, sell the news type situation. But overall, I think with the expectation and anticipation of rate cuts, I think it's going to be bullish. And I think we're going to continue on these directions. These are really big trends with really big indices and sectors of the market, and they continue to look good, strong, and bullish. Gosh, even let's see, RETL. Maybe not that. I'm trying to think. What is it? XLR. There we go. XLRE. Thank you. I'm trying to get the real estate. How about that one? Interest rates being cut. Finally, yeah, bullish for real estate. Right there, and up like that. So yeah, we've been seeing some individual names too that have been doing well in this kind of environment. Heck, even Redfin is starting to perk up again. Look at that. We had some little fake out pops back in the day, but I think this is going to be the real one. Can't verify it, but I think this is going to be more legitimate. So again, I'm not sure if I really want to go buy it up and through here. Maybe kind of look for the next opportunity. But you look at these things, Redfin has been on its lows for a very long time, very boring, not doing much. But now we're finally starting to see some traction, and we've got some squeezes that are working out too. So I think from a longer term perspective, this could be an interesting name to be taking advantage of when we finally find that opportunity. All right, guys. So I'm going to kind of leave it there. The market, as I said, has been chopping around. I think the SPX dropped just a little bit, yeah, on these lower time frames. That's fine. Probably some pre-FOMC jitters. People trying to take their money off, be like, yep, I'm going to de-risk going into this. So that's why I definitely didn't see the market going up today. Again, my bias is that we actually get a little bit of weakness and pull back into or in the market for the next few days. I would like to see basically this hourly chart get fixed. I think that's a little bit too much of a gap. So I'm going to be leaning to the downside until that happens. And then preferably we see if it tests support, goes bullish again, and we get a nice move to the upside. So let's see what happens. Hang on to your hats for the FOMC. That's going to be in a few hours from now. And then we'll see what tomorrow brings. All right, guys. So thanks again. We'll see you later. And for those of you in the Moxie room, I'll be back in the chat room, and we'll just kind of wait until the FOMC. You guys take care. We'll see you.